The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve. You can check out my show daily, Monday through Friday on TFNN from 3 to 4 Eastern. If you want to give me a call, toll free, the number is 877-927-6648. If you can't listen to the show live, you can head over to iTunes, pick it up as a podcast. And another way to listen to all TFNN programming is with your smartphone. Very convenient, very easy to do. Just open your smartphone browser, type in tfnn.mobi, tfnn.mobi. Click listen. It's as easy as that. You can get the stream that way as well. And don't forget about Tiger TV on the homepage of tfnn.com. Channel 1, the show is carried live. It is archived on Channel 13. And you can look at charts on Tiger TV. Not only get the show audio, but you can look at charts live right along with me. Tiger TV is also viewable on your handheld device as well. Just open your smartphone browser, type in tfnn.com. Over on the top right-hand side of the homepage, just click that box with those mobile devices in there, and Tiger TV will start streaming on your cell phone. Interesting, I heard on CNBC earlier today from Carl Keaton, the S&P 500 is working, well, up until a little while ago, was working on its 7th straight weekly price gain. The last time the S&P 500 started off a year with 7 straight up weeks, you'd have to go all the way back to 1967 to see that. But let's check in on the major averages here. NASDAQ Composite near its session low, down a little more than 11 points to 3187. S&P 500 is also near its session low, down 5.5 points to 1516, and the Dow. Let's check in on the Dow. The Dow's the main culprit here. It's down about 44.5 points to 13,929. Now, what happened here about half hour, 45 minutes ago, Dow component Walmart was mentioned in a Bloomberg report. Basically, there was an internal email that went out from a Walmart vice president that was sent to company executives, basically saying that February monthly sales are a total disaster. And Walmart was quick to give a comment. Basically, they said, as with any organization, we often see internal communications that are not entirely accurate, that lack the proper context, and represent individual opinions. We will release our fourth quarter earnings on Thursday, February 21st, before the market opens. So this news caused a lot of selling in the market, and it was another kind of ho-hum session, but that is why stocks are where they are right now, near session lows. It is options expiration today, and we're seeing a big burst in volume on the New York Stock Exchange. Yesterday we had volume of 668 million shares. We're tracking about 50% higher than that today, so very heavy volume on the New York Stock Exchange. On the NASDAQ, not so much so, tracking very close to the 1.83 billion shares that we saw yesterday. So that's it for the markets here, near session lows, and but a lot of that has to do with this internal email that went out at Walmart. But again, Walmart does report earnings next week on Thursday before the open, so we'll see what happens. We'll take a look at shares of Walmart, see how it is responding to this Bloomberg report. You can see the stock's taking a hit, down 2.9% to 68.77. It's not like Walmart has been a leading stock in the retail sector. You can see there's been a lot of technical damage done to the stock between well, basically starting in October all the way till the end of the year. It's been rallying back a little bit this year, but with its higher volume decline today, it is in rough technical shape here. Normally when you start to see heavy volume selling pick up in a stock like what happened with Walmart in October, November, December, it's usually due to some extent deteriorating fundamentals, perhaps weaker sales growth ahead, weaker earnings, what have you. But price and volume trends in Walmart have not been that great, even headed into today. Let's take a look at the XRT. This is the Spider S&P Retail ETF. Kind of a wild day of trading. It was actually hit a new 52-week high today of 68.60. It is now trading near its low at 67.30, down 0.6%. Interesting. This is a very liquid retail ETF, but Walmart not anywhere near the top 10 holdings. In fact, the top 3 holdings for the XRT: Netflix, Rite Aid, and Shutterfly. Those are the top 3 holdings of the S&P Spider S&P Retail ETF. So looks like an outside day taking shape here, and pretty bearish price action today. You see this big wide intraday spread. This is what an outside day looks like, and you could see continued weakness in this fund based on its price action today. The U.S. dollar index up, but not by much, up slightly to 80.49. Take a look at that U.S. dollar index on a daily chart here. And yesterday, we actually did get a breakout over a descending trend line. Big move in the dollar. Yesterday closed near highs. It is extending gains today, but not by much. Again, it closed Thursday at 80.46. It is up at 80.49 right now. So still has some pretty significant resistance to conquer here at 80.90, which is its 200-day moving average. April gold, another rough day for gold. It dropped $26, settles at $1,609.50 an ounce, down 3.4% for the week. Definitely a rough week for gold, and a rough week for the GLD as well, the Spider Gold Trust here, which basically tracks approximately 1/10 the price of an ounce of gold. And you can see the GLD down 1.8% currently to 155.43. It did take out its December 20th intraday low of 158.39 today with conviction. So technical picture of the GLD continues to look quite poor. March crude oil fell $1.45 today, 1.5%. Settles at 95.86 a barrel. In the oil and gas sector, a couple of big decliners today. Transocean gets a couple of downgrades. You can see a big move for the stock yesterday. Basically, the company yesterday won approval to plead guilty to violating the U.S. Clean Water Act for its role in the April 2010 Gulf of Mexico oil spill. Last month, RIG agreed to pay a $400 million criminal fine and $1 billion in civil penalties to the U.S. So the stock responded positively to yesterday's move, but they had basically a fleet update that came out. Deutsche Bank did not like what it saw there, cut its rating on the stock to sell from hold with a price target of 49. The stock also got a downgrade from Howard Weil. So shares of REG down 5.5% to 56 today in very heavy volume. Remember, we heard from EOG, oil and gas producer EOG Resources, yesterday. Nasty reversal after a market liked its earnings report at first yesterday. It you can see it hit a high over 137.50, closed near its intraday low, right around 133 or so. It is down 4.1% today to 127.87. So 2 straight days of higher volume declines for EOG. This one still holding above its 50-day moving average, you can see, but a lot of big sellers in the stock the past 2 days. Yield on the 10-year note at last check, just a hair higher. 2.01%. The yield on the 30-year bond just a tad lower to 3.04%. 0.18%. In fact, let's just go ahead and take a look at these yields on a daily chart. Here is the 10-year. You can see a reversal. Yesterday closed near lows. Another reversal today. The 10-year is just a little bit higher, like I said, to 2.01%. And the 30-year bond, which would be TYX here, you can see it is pretty much unchanged from the prior session, trading at 3.18%. So yields hanging in there, definitely in an uptrend here, and we'll see what they look like next week. Economic data today: Empire Manufacturing for February, really solid reading here after a reading of minus 7.8 in January. The Empire Manufacturing Index came in well above expectations with a reading of 10. So we'll see what the ISM Manufacturing Index looks like next week. It's going to be busy week of economic data next week, so that'll be the next piece of manufacturing data on tap. We also got the preliminary February reading. University of Michigan consumer sentiment came in at 76.3, which was much better than expected. January's final reading was 73.8. Economists expected a small decline to 73.5. So good, solid reading from the University of Michigan earlier today. Let's take a look at some newsworthy stocks here. How about starting with PDF Solutions? Beautiful breakout for PDF Solutions today, over $16 a share. Stock is up close to 8% to $17.10. And I just wanted to check on PDF here, because I think it was earnings that the company came out with, because the stock is making a monster move today, and yeah, it's just a good solid earnings report from PDF Solutions, and the growth, very solid. Nice acceleration in sales growth for the second quarter in a row. Sales up 35% to $23.8 million. Earnings up 100% from a year ago to 24 cents a share. So nice numbers from PDF Solutions, and nice technical breakout in heavy volume today. Also had another IPO hit the market today. Zoom Corporation, ticker XOOM. Company raised just over $100 million by offering 6.33 million shares at 16. That was above the proposed range of 13 to 15. Company basically operates a money transfer business that lets basically U.S. residents or people living in the U.S., they use their computers and smartphones to send money to 30 countries. So a lot of successful IPOs definitely in the past few weeks. Zoom right now up 44% to $22.99. So priced at 16, trading at $22.99. The average first day pop for an IPO in 1999 was 72%. In 2000, it was 56%. So far this year, the average first day gain for an IPO, just 10%. So Zoom doing much better than that today. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Talked about the successful debut for shares of Zoom, ticker XOOM, and another recent IPO came public last year, February 2012, at $16, now trading at 47. Proto Labs, one of these 3D printing companies. Looks like Proto Labs is getting ready to fill its gap between 44.90 and 46.70. So 44.90, that's going to be its high over here. 46.70, the low that it hit earlier this week on Wednesday. So could see a pretty quick gap fill here for Proto Labs. Stock made a big move on Wednesday on better than expected earnings. Remember, this is a company that does not make 3D printers. They provide 3D printing as a service. There was negative comments made about 3D systems yesterday by Citron Research, which is a notorious short-selling firm. People say, they don't have a lot of credibility, but, when they say something negative about a stock, it does move the stock, no question about it. 3D Systems down another 4.9% today to 59.69, flirting with a break below its 50-day moving average, but the last time it flirted with a break below its 50-day line, it found support. So we'll see if it finds support this time as well. 3D Systems still under quite a bit of pressure today, and a competitor, Stratasys, has really broken down here. This one looks to be lower 7 out of the past 8 trading sessions. Flirting with a trip to its 200-day moving average, which is currently at 63.46. Stratus is down another 3.8% today to 68.49. Yesterday, Citron Research said about 3D Systems, it's kind of a bubble, and I can't disagree. With that observation, because both Stratasys and 3D Systems very, very extended and overbought, and frankly there was a little bit of euphoria around these stocks. What we know right now is that they are basing and they are consolidating gains. They're taking a breather after a big price run, and it's very dangerous buying a stock as it's consolidating. It's better just to wait for a new base to form, wait for the stock to retest a high. If it does that, it's good to see some, buying, some heavy volume buying on the way up. Signs that the stock is being accumulated as it goes for a test of a prior high. So that's what I'll do. I'll watch 3D Systems and Stratasys right now, see if they can build a good base and digest gains for a period of time. And if they can do that, and market conditions remain favorable, we could see breakouts over the next several weeks. But the story still has a long way to go to play out. Let's check in on shares of Herbalife, HLF. A lot of polarizing stocks on Wall Street. This is definitely one of them. Just excessive volatility in this stock. You can see it hit a high today of 44.93. Now trading at 39.48. Pretty much at its session low here, up 3.2% on the day. But a lot of sellers in this stock. It did gap above its 50-day moving average. Its 200-day moving average at 46.32. You can see it got close to that, but again, it has reversed. Trading at its session low right now, still up 3.2%. But news here is that Carl Icahn has a 12.9% stake, 12.98% stake in Herbalife. Herbalife, of course, a nutritional supplement company accused of being a, basically a multi-level marketing firm by hedge fund manager Bill Ackman. I think he called it a pyramid scheme. I almost called it a Ponzi scheme, but it's a pyramid scheme. Remember Bill Ackman came out with a 300-page report and saying this is why we're short the stock. And anyway, so just two guys going back and forth, one bullish, one bearish, and I'll tell you, kind of a bearish day of price action for Herbalife today, giving back all of its gains. And trading near its session low. Big volume in Gap today, GPS. Gap, normally very liquid stock here, normally trades about 5.8 million shares a day. Volume today, 15.7 million. See, the stock is up more than 5% to 32.97. A rumor came out, I think Dow Jones reported that some Japanese company might be interested in buying at Gap, but totally unsubstantiated. Still very, very heavy volume in Gap today, so someone seems to know something, so we'll see how that materializes over the next several days. But nice percentage gain and big volume in shares of Gap today. Over the next few weeks, the retailers are going to be coming out with earnings. Again, next week we have Walmart, and then the next 2-3 weeks will be very busy in terms of retail. I'm not so sure the news is going to be that good, but we'll keep our fingers crossed for good earnings reports in the retail sector. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Markets trying to come back here. About 25 minutes left to go in Friday's session. The Dow right now down 24 points, 13,949. NASDAQ Composite down almost 10 points to 3189. S&P 500 down 4 points to 1517. During the last, over the past hour, 45 minutes or so, selling in the market really accelerated after Bloomberg reported an internal email from a Walmart vice president that was sent to other executives at Walmart saying that February monthly sales are a total disaster. Remember, you had this the payroll tax that took effect, more money coming out of paychecks. You look at the overall clientele that Walmart caters to. Not surprising to hear that February sales could be a bit soft. And again, when you look at the way that Walmart has been trading, pretty much since October, you had a lot of institutional selling hit the stock basically between October and November. You had a little rally attempt in November to the early part of December. Comes right up to its 50-day moving average, doesn't even come close to retaking it, gets turned away, more institutional selling in the stock. So there's no question that big sellers have been in Walmart for some time, and they are once again in the stock today. It is down another 2.5% to 69.08, and we will hear from Walmart next week on Thursday before before the open, and then fairly quiet next week in terms of retail earnings, but the following week, the week after that, into March, we're going to be hearing from a lot of retailers, and I'd like to think that the news is going to be generally good. I think there will be the bright spots out there, but this is could be a tough earnings season in terms of outlooks issued for the retailers, but we'll see how that plays out. Mentioned the big heavy volume gain in Gap today, and also wanted to take a look at Urban Outfitters, because Urban has been a strong performer in the retail sector. Got a downgrade today from BMO Capital Markets. Not a huge downgrade, but a downgrade to Market Perform from Outperform. BMO Capital Markets says the turnaround of Urban Outfitters' Anthropology brand is going okay, but it remains a work in progress. Urban, you can see here, firming up at its 50-day moving average, showing pretty good technical action, kind of a low volume pullback to the 50-day line. It broke below it earlier today, but is back above the line, so making a case it's going to try to find support there. Big move today in shares of Biogen IDEC. You might remember Biogen recently paid Elan $3.25 billion for full ownership and control of Tysabri. Tysabri is used to treat multiple sclerosis and Crohn's disease. Elan is also going to get some royalty payments from Biogen. But what's ironic here is that Biogen is still awaiting FDA approval. We should hear very soon from the FDA about Biogen's oral MS treatment, a pill called BG12 that has had fantastic clinical data. So Biogen has really come back to life here, up another 2.5% today to 168.75 in pretty strong volume. All right, let's go to the phones here. 877-927-6648. Going to talk to Art in Orlando, beautiful Orlando, Florida. How you doing today, Art?
Fine, thanks, Ken. How are we doing?
Not too bad, not too bad. Happy Friday.
Glad to hear you're over that sore throat or whatever it was.
Well, thank you very much. You know, the irony now is that it's starting to warm up a little bit in California, and all the flowers are blooming, and I have this, hay fever and allergies and all that. So the past couple of days, I feel fine, but geez, I've been sneezing and runny nose and all that stuff. So I can't catch a break, but I'm not complaining.
Got two quick questions for you. One about an ETF, and then one about, I guess you'd say, just a basic fundamental question. The MLP is AMLP, the Alerian, the ETF rather is the AMLP, the Alerian Master Limited Partnership.
Got it, AMLP. I got it up in Tiger TV here.
Yeah, I see.
So what you doing with it? You own it? Looks interesting to you? What do you?
No, just begun to look into it. The interesting factor about AMLP is it. Since it holds a bunch of MLPs, it's something that it might be suitable for an IRA, whereas individual MLPs can cause the IRA to go taxable if you have too much of a return or get too great a return on them.
Yeah, no, I like that line of thinking with the AMLP, the Alerian Master Limited Partnership. You do get a good solid yield of about looks like 5.5–6%, something like that. And technically it's very strong. So anytime you can find a good solid yield, and you can also find either an ETF or a stock with a good solid yield that is showing signs of accumulation, which the AMLP is clearly doing now. I think it's a worthwhile. I think it's a worthwhile look. I like the look of the stock technically. The yield is good. It's under accumulation. Bullish chart. Can't really find much wrong with it. That's about
all I've been able to find out so far about it too. It's not like it has as much information as they're available like a stock or some other equity might, but.
Yeah, that's definitely true, and I think that's really the only thing when you're looking at when you're looking at a fund like this, it's just important to try to understand. Okay, are we talking about something that is showing positive price and volume trends? Is it in an uptrend? Do higher volume declines, higher volume gains, have the upper hand over higher volume declines? And technically it looks good. You get a solid yield, so you're getting bang for your buck, it looks like.
The other question I had is more related to IBD. I'm an avid reader, I guess you'd say, and of course I've read a good deal of Mr. O'Meal's primary book too. But
yeah,
they mention there's a one paragraph mention, I think, in the book about how return on equity is an important characteristic. But and they list it, of course, in all of the small stock charts they show it in the IBD 50 or in Stock Spotlight or the other features. But
right.
A lot of the time they show a stock, the return on equity is in the single digits or even negative. And I'm wondering, why would they show a stock like that if ROE really is important?
Well, that's a question that I've gotten before. Certainly, I got it a lot when I worked. The 10, 12 years that I worked at Investors Business Daily. The first thing about ROE is that it varies substantially by industry. So a lot of your high tech, fast-growing technology names. It's very rare to see some of these big market leaders that have single-digit return on equity. Now, with a newer issue, maybe a company that has only been trading for a few years, sometimes it takes return on equity a little while to get going. But it does. You really have to kind of look at ROE. Really look at the sector the stock is in, because they're return on equity of 5 to 10% in an industry that is more defensive in nature isn't that bad. But again, when you're looking at high tech, fast growing tech stocks, you really want to keep that ROE at least 20 to 30%. So why they show them in the paper, there's a lot of times where there are so many positives about the company that I think the paper feels like the investors should know about a company, whether it's big earnings and sales growth or an innovative product or service. Sometimes the positives far outweigh the negatives, and if you've got kind of substandard ROE but everything else is positive about the company, then they'll go in there and just throw it out there as an idea. One company that comes to mind is Stratasys. These 3D printing companies. I think DDD, its ROE is 18 to 20%. Stratasys is only 13%, so that would be a little bit below the threshold. It's been under a lot of selling pressure lately, but again, you've got a lot of other good things going on at Stratasys in terms of growth prospects, annual earnings, things like that. So
I guess the ones that took me more back were when they have an ROE of 0 or sometimes even negative, and I realize that can be because of the debt position of the company or other factors. But I appreciate the explanation. Thanks.
Yeah. Okay. Well, thank you, Art. Good to hear from you.
Take care.
All right. Art in Orlando. Yeah, it's a good question. Sometimes ROE can be skewed as well, because basically, return on equity is basically taking the net income of a company and dividing by shareholder equity, which is basically assets minus liabilities. So sometimes that ROE number can be skewed for a variety of reasons. But when I say to people, again, when Stratasys was had that big breakout in April 2012, bullish technical setup, fundamentals were outstanding. The breakout was over a swing point of 41.75 back in February 2012, but at the time you had big earnings growth, people just discovering that stock's story. So yeah, ROE might have been a little bit on the light side, but that breakout over 41 delivered a gain all the way this year up to $90. So it was a nice double if you had bought right. So anyway, that is that. Let's take a look at some other earnings reports here. CBS higher at last check. CBS Corporation up 3.4% today to $44.41. The company made 64 cents a share. That was 5 cents below the consensus estimate. Sales a little bit below expectations as well, but the company did say it would double its share buyback program by $1 billion in 2013. Remember, CBS is also preparing to spin off its outdoor billboard business in North America into a real estate investment trust. Let's also take a look at On Assignment, IT staffing firm. Pretty bad quarter here from On Assignment. Earnings up 5% to 21 cents a share. That was 7 cents below the consensus estimate. Top line growth was solid, above expectations. Sales up 148% to $401.7 million. But the guidance was pretty bad here. First quarter earnings guidance 16 to 19 cents a share. The street was looking for 24 cents. Revenue 375 to 380 million. Street was looking for 385. So On Assignment gaps down, now trading below its 50-day moving average. Stock down today 11.4% to 2184. Also, a weak earnings report from IPG Photonics. Again, a stock that was not looking too bad ahead of earnings. A nice day of outperformance yesterday ahead of earnings, and just goes to show you, stocks showing good price and volume trends right ahead of earnings. It does not mean they're going to continue higher. Even if they report solid results. The results at IPG Photonics look to me to be pretty much average. This is a company that makes fiber lasers, fiber amplifiers, and diode lasers. EPS up 5% to 67 cents a share. They were supposed to earn 72 cents. Sales up 17% to $145 million. That was also below expectations. So rough day for IPG Photonics. Let's take a look at J.M. Smucker. J.M. Smucker earned $1.47. That was 8 cents better than expected. I can see after early strength, the stock is now trading at $92.31, well off its intraday high of $94.99, up only 15 cents on the day. Remember, last year, J.M. Smucker bought the North American food service, coffee, and hot beverage business from Sara Lee. Again, that was last year. That was a $400 million deal. Sales at J.M. Smucker up 6% to $1.56 billion, mostly in line with expectations. Couple of other earnings reports here. VF Corporation, VFC. Let's check in on this one. A lot of interesting brands at VFC. Nice move for the stock today, up 3.6% to $158.25. Had been under quite a bit of selling pressure pretty much since October. Nice move for VF Corporation today. Some of its brands include North Face, Timberland, Vans, Wrangler, Nautica. A lot of popular consumer brands. They made $3.07 a share, 4 cents better than Views, up 32% from a year ago. Sales up 4% to $3.03 billion. So nice numbers from VF Corporation. And got a busy week coming up next week. We're going to talk about some upcoming earnings reports and put the finishing touches on this week. We'll do that when we come back in about 3 minutes. Ken Shreve with you on Breakout Investing. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Stocks doing their darndest to come back here as we head into the close here. NASDAQ Composite right now down 8 points to 31.91, still trading in the bottom half of its range today, but major averages looking a lot better than they were a half hour ago. S&P 500 trying to get back to the middle of its range today, down just about 3 points to 1518, and the Dow Jones Industrial Average trading in the middle half of its range right now, coming back after hitting a low of 13,907 today. Right now the Dow down 12 points to 13,961. Again, the story today, stocks, some sellers came into the market during the last hour of trading after an email sent by a Walmart vice president was leaked to Bloomberg. Apparently a Walmart vice president wrote in an internal email to executives that February monthly sales at Walmart are a, quote, total disaster. Walmart still down 2.4% on the news to 69.09. We're going to be hearing from Walmart next week on Thursday when they report quarterly results here. Taking a look at a couple of stocks set to report earnings. Let's take a look at American Woodmark, not a widely known name here. They report on Tuesday. Remember, folks, the market is closed Monday for President's Day, so our next edition of Breakout Investing will be on Tuesday next week. American Woodmark acting pretty well here. Another chart that's looking pretty good ahead of earnings. It doesn't necessarily mean that earnings are going to be great, but this is a well-run company, pretty good fundamentals. Stock definitely under accumulation here, holding gains. They make kitchen cabinets, basically for the remodeling, new home construction markets, and also Lumber Liquidators going to be reporting earnings next week on Wednesday. Strong performer, but you can see a nasty reversal in Lumber Liquidators today. Hits intraday high of 64.64, now trading at 62.15, down 2.8% on the day. Not sure that volume's going to come in higher than what it did yesterday, but ugly reversal for Lumber Liquidators. It reports earnings next week on Wednesday, and also Boston Beer Company. Sam, remember, had a breakout gap up for the stock back in December. I think the news there was significantly raised guidance, but another stock acting very well ahead of earnings. We're going to hear from Boston Beer next week on Wednesday. Other earnings reports to keep an eye on next week would be Yandex, YNDX. They report on Tuesday. This is a Russian search firm, similar to Baidu and Google. They do control the Russian search market. Yandex, YNDX. Stock has made a nice rally since early December, when it was trading around $21 a share. Now at $25.60. So maybe some optimism about what that company is going to have to say. And CF Industries, CF Industries, the fertilizer company, they also report on Tuesday, looking quite vulnerable, doesn't it? Ahead of earnings, sitting right at its 50-day moving average here. Will it find support, or will it not? Mentioned the Carl Icahn, 12.98% position in Herbalife. Herbalife really has turned into a not such a great day for the stock after hitting an intraday high of 44.93. It is now trading at 38.94 at its session low. So a spectacular reversal in Herbalife. We're going to hear from them on Tuesday as well. So there should be a lot of fireworks on that day. Don't forget, the market is closed Monday for President's Day, so we'll be back on Tuesday with another edition of Breakout Investing. Don't forget to check out 30 days free of Ultimate Growth Stocks right on the homepage of TFNN.com in the newsletters tab. Coming up next, the Tom O'Brien Show. Have a great weekend, everyone. We'll talk to you next week.